In this video, I want to have a discussion about commercial property versus residential deals. And I just want to chat you through my perspective of why I'm not buying commercial property right now and explain when I plan to actually break into the commercial property market. Because commercial property has been a hot topic over the last few months, and a lot of people have been asking me, Luke, will you help us with commercial deals? Why aren't you investing in commercial yourself? So let's unpack some of those thoughts. Now, I do eventually want to own some commercial property, but the big detractor for me in terms of getting into the commercial property market is two key things. Is the risk involved? There's so many more risks, in my opinion, when it comes to commercial property investing, as well as the capital required. So those are the two big hurdles that are stopping me right now wanting to break into the commercial market. So let me tell you about my plan, and that will probably explain to you, my thoughts and philosophy around investing in commercial property. So for me, I look at commercial property, and there's a lot of different types. The main two types that interest me would be industrial, because I know the banks like the industrial warehouse, investments, and the retail investments. I'm not really interested in specialty assets or offices because they come with even higher risks, and the banks don't tend to like those assets and want even greater deposits. After chatting with a private banker recently, a big bank here in Australia is looking at 65% loan to value ratios if you buy an industrial or a warehouse product. If you then look to get into a retail product, you need 55%. If you then want to look to get into a specialty asset or an office space, you then need about a 50% deposit with this major bank. And so what that says to me is the banks see these assets as more risky and want investors to have more equity in the deals to buffer the bank from the risk of buying that property. And so that involves a lot of capital. Say you look to buy $1 million asset, you might need $500,000 of cash, which is 50%, and that probably equates to about 40% once you take out your stamp duties and your fees and your insurance and a bit of a cash buffer and all those things to buy $1 million asset. Now, I personally don't want to buy $1 million industrial warehouse because that's what most families, mum and dads, investors, high income earning professionals could afford to buy. I actually want to play in the commercial property space between 2.5 to 7.5 million. And the reason is you can buy bigger sites, you can buy a slightly higher net yield, and you can potentially reduce your risk through multiple tenancies, whether it's multiple sheds, warehouses, or multiple retail shops. That's my thought process around the commercial property investing and where I want to go with it. And so the question I get asked is, if that's your vision, Luke, if you want to buy a commercial property between say 2.5 to 7.5 million, so let's say the midpoint, $5 million, why don't you just get the $2.5 million of cash together and buy that deal? Well, that's the problem, is you've got to have $2.5 million of cash to buy that $5 million deal. And so the issue with that is I either have to sell down the residential property portfolio or take up massive debt against the residential property portfolio, which means I'm 100% lending this commercial deal, and then buy the commercial asset and manage all that risk involved there as well. And so that's why it's a bigger game plan for me to then get into the commercial property investing. For me, I want to hold my residential property portfolio and continue to grow the equity and asset base before I transition into the commercial space. Now, there are some guys out there that say, the commercial matches the residential growth. What I've seen is they bought a site for 3.2 million, and actually that site was sold 4 years earlier for 3.2 million, when that suburb had doubled in terms of the residential house prices. Now, that's just an anecdotal example, but the reality is that a lot of these commercial sites, they do grow, but they don't grow anywhere near as much as the residential assets. There's businesses driving the commercial property market, whereas it's the affordability and the owner-occupiers and investors driving the residential market. And so I would rather stay in the residential property space for longer with more debt and more holding costs and grow the asset base rather than jumping too early into the commercial space. And so that's the vision for the property portfolio over this period of time. Say in 5 or 7 years, I'm sick of the residential assets, I'm sick of the negative cash flow or the maintenance headaches with the tenants. I'll start selling down one property a year over say 4 or 5 years. So be very careful with the tax periods and being smart with how I use the funds. Then from there, I'll get the $2.5 million worth of cash together and buy that $5 million site. And that's my long-term vision, is I don't want to trade out too early from the residential into the commercial because I don't want to sacrifice the growth for the cash flow too soon. Now, we can all disagree on our investing strategies, that's why it's tailored to our personal circumstances. You don't have to do what I'm doing and buy 6 houses in Southeast Queensland and a unit block in a regional town like Coffs Harbour. You might be buying in Melbourne or in Darwin or in Townsville or in Brisbane. It doesn't really matter. Whatever you're doing, it has to be tailored to your specific strategy. And so my vision for my property portfolio and my family's property portfolio has generally been focused on the growth first and the cash flow second. And the reason is that growth creates that net worth, which you can sell down, you can leverage, and the growth ends up increasing your cash flow over time. And then I want to transition to cash flow when I'm wanting to live off that property portfolio or create more passive income. Now, the reality is that it doesn't work as simply as that. Now being a more sophisticated investor, or I'd like to think I'm more sophisticated at this point in time, with the property portfolio sitting around $9.5 to $10 million in terms of the total value, what I'm seeing in reality is I'm more playing a game of liquidity. I'm working with the brokers and banks to access more equity to then go and do subdivision or granny flat or secondary dwelling style deals. And so I'm creating equity by doing 3 minor build projects. And so the game changes for me. And then also having more money in my offset accounts might take out the stress from work and life and holding a larger property portfolio. Now, when I look back to when Emily and I first started investing as a young married couple, our buffers were a lot smaller. $2,000 when we bought our first home, or $5,000 as we bought the second deal. And then it was $20,000 and $50,000. Now, to be perfectly honest with you, I hold a 6-figure cash flow budget and buffer. And the reason I hold that budget or buffer of at least $100,000 plus is because the portfolio size is a lot larger and there's a lot more debt attached to this asset base. When you start getting to the millions and millions and millions of dollars worth of debt and assets, then you've got to be careful about your buffers and how you be aggressive or don't be aggressive. Be aggressive. Generally, you want to be aggressive, more aggressive when you're starting to grow the property portfolio. When you're looking to do deals 1 through 3 to deal number 5. Now the property portfolio for myself is more in a consolidation and letting compounding do its thing with the compound growth. Now I don't want to be as risky on these deals. And so I'm picking the deals. The 2 deals I bought this year in Ipswich, for example, were advantageous, to be perfectly honest. I saw 2 gems and I went to my broker, Nevada, who you can work with as well by going to purposeproperty.com.au and clicking on mortgage broker. And I had a 15-minute chat with Nevada, my broker, and I said, look, you know my income, my serviceability. There's 2 cracking deals here that I want to buy, and I want to be aggressive with my offers. Can we get finance done in a comfortable window of time? And he gave me the thumbs up. He gave me the green light, and that's why I was able to be advantageous with picking up those deals early in 2025. And now looking back, those deals have moved 10%. And so if we're talking $640,000 purchases, those deals are now sitting around $700,000. That's a crazy amount of growth in less than 6 months. But that's where the market's heading at this point in time. But I'm not buying for this short-term growth. I'm buying for the next 5, 7, 10 years. And so with the fundamentals and a long-term mindset, I'm less worried about these short-term fluctuations, but I am being strategic when these types of deals come up. And I am being strategic to access equity at every point along the way. One mistake I see a lot of the time is that investors go to their mortgage broker and only draw out $100K for the deposit on the next deal, when they could have drawn out $500,000 and parked that money in their offset account and used it as buffer and used it for a bit of a renovation budget on the next investment to add value, and used it as safety net for their family to know that they had repayments for the next 5 or 10 years on their property portfolio. And so understanding this as a chartered accountant, which is my background, and running the buyer's agency coming up to 5 years now professionally, that all comes together with experience and time and knowledge. And so that's why I create these YouTube videos, is to share with you my personal plans, my personal journey, what we're doing for clients, and some knowledge and insights on the Brisbane and greater Brisbane market. So it's hopefully helping you as well. If you do want to work with myself and the team at Purpose Property to help you secure a property here in Southeast Queensland, then make sure you head over to purposeproperty.com.au. I'll sit down with you and have a 20-minute chat, and we can talk about where you are right now and what you're looking to achieve in the near future and how we can help you buy that next property here in the Southeast Queensland market. I'd love to hear your thoughts in the comments below. Are you focusing on the residential property investing, or are you going to jump over to commercial sometime soon? Because it's certainly a hot topic at the moment, and I've then shared with you my bigger picture and vision for my own portfolio. So I'd love to hear your thoughts in the comments below, and make sure you give this video a click right here in this space, because YouTube knows that's the one you should watch next. All right, I'll see you over there. Peace.